to Melbourne. We've got Stan Shamu joining us from IG there. Stan, good morning to you.
Morning.
We've got lots going on, and we saw a lot of volatility for the US dollar. So, you know, what is really driving it, not only today, but of course as we head further toward the September meeting, and we're talking about the US Fed, of course.
Yeah, absolutely. It's all about shaping up expectations for September tapering at the moment. I think the market was firmly in the mode that we will be starting to see tapering in September for a while. But of course, all the Fed members that have come out quite recently have been quite consistent now in their tone of language. It's all been about how the data will progress over the next few weeks as we head towards the September meeting, of which we'll get the results on September the 19th. And of course, overnight we had a pretty volatile situation on the US dollar front, as initially we got some very good unemployment claims data, which showed that claims last week dropped to the lowest level in 6 years. At the same time, we had the CPI print up 0.2% and in line with consensus. So that really did boost the US dollar earlier on. But of course, later in the session, everything all changed when we got the Empire State Manufacturing Index. We had the Philly Fed Manufacturing Index and industrial production all missing the mark as well. So that actually saw the US dollar reverse and, of course, lose a significant ground as it was offered to most of the G10 currencies. So it really does look like it was a situation where investors were ready to react to any sort of form of changes in those expectations for tapering. I think a lot of analysts still feel that perhaps there will be an announcement on QE in September, but probably implementation of the tapering won't necessarily happen or start in September. It might start later on in the year, possibly in October or November. So that does seem like it might be the most likely outcome at the moment. But of course, any data that comes out over the next few weeks heading to the September meeting will definitely be shaping up tapering expectations, and we'll continue to see volatility in the marketplace.
Now, Stan, let's look at the Asian market. We don't have any huge data points released today. So what are we expecting? I guess the focus will be on Tokyo's response to the stronger yen. What can we expect? How can we expect that to play out?
Yeah, absolutely. It will all be about Japan today. Of course, with the US dollar being so volatile, the dollar-yen saw quite some big movements. But of course, heading into the end of US trade, it actually dropped to about 97. So a stronger yen is generally quite negative for the Nikkei, and that's exactly what we're expecting to see today. Already, their market there is pointing down about 1.6%. So that should be quite a benign start. There's also that issue of the corporate sales, of the sales tax, and of course the corporate tax as well. Yesterday, their finance minister Aso was on the wires, just declining the fact that the government was considering a corporate tax cut to help neutralize the sales tax hike that they're considering at the moment. So with that in mind, the yen actually rallied as well yesterday, and of course this was negative for Japanese equities. So we do expect this story to continue to do the rounds. Of course, it initially emerged in the Nikkei newspaper, so unless we do hear from Prime Minister Abe coming out and confirming these reports, then it does look like that Japan is in for a long period of weakness at the moment.
Not good news. Let's talk about the here and the now. We've already heard from ANZ today, giving a trading update, posting a 12% rise in third quarter profit. So, you know, by all accounts, that's pretty good, coming in line with its own forecasts.
Yeah, absolutely. I think ANZ's in a pretty good spot at the moment. Of course, just like Commonwealth Bank, we did expect to see the banks continue to come out with some very good earnings. Of course, ANZ came out with about an 11% growth in cash profit to 4.8 billion. That's just for the third quarter, for the 9 months really, and it does look like they're on track for another record year. So it does seem like all these banks are really hitting the right mark in terms of maximizing their potential on the earnings side, and of course continuing to manage those costs. I think because of the situation Australia is in at the moment, whereby revenue continues to be uncertain, a lot of these banks are really looking at cost cutting and managing expenses in order to protect earnings, and that's exactly what we've seen from ANZ once again. it does look like they will continue to rein in on those costs, and they have already come out with some pretty big job cuts in the past, and I think that will continue as long as they can match that sort of falling revenue with or a declining pace of increasing revenue with some job cuts to go with it and help earnings continue to push higher. And at the same time, it looks like perhaps their Asian strategy might be losing a bit of momentum. Over the past few days, we've heard them selling out of a few stakes, particularly in one of their banks in Indonesia. So that story will continue to unfold as well, and we'll have to see how it develops in order to know exactly what's going on with ANZ. They've actually been one of the lowest interest rate offering banks as well out there, so that they're hoping this will help them cope with increasing market share, and of course try and steal some market share out of Commonwealth Bank, which is of course the biggest lender in Australia. At the same time, the falling rates will probably help with their net interest margins. I think they reported another fall in net interest margins, I think around 2 basis points. So it does look like they're on the right track at the moment. And the main concern really for investors at the moment is whether or not these banks are justified trading at the levels they are trading at the moment. So should the stock open higher, probably we might see a similar price action to what we saw with Commonwealth Bank, where it actually falls on a fairly good report as investors continue to mull over the quality of earnings going forward and exactly where they will extract earnings from a market which just seems to be struggling on a deteriorating economy.
Yeah, it's going to be an interesting one to watch today, the banking space. We are expecting to hear from RBA Assistant Governor Guy Debelle today, speaks at about 11:30. Are we expecting to get any more hints about monetary policy in that, or will he sort of steer clear of that? And keeping in mind that we do have the RBA minutes set to be released next week.
Yeah, I think with Australia at the moment, it seems like the Aussie dollar is really telling the story, really. We've seen a bit of a squeeze higher, and that's just mainly because the recent rate cut seems to be the last one before they had to take a bit of a wait-and-see approach and sort of establish their position for the next cut. I think the market was starting to look for another cut immediately after the first one, or at least hints that there was a need for another hasty cut for the RBA, but it doesn't seem like it's the case at the moment, and we don't really expect to hear anything new out of the RBA until next month, really. Of course, it does look like the Aussie will continue to move a bit higher in the short term. It did come off as the US dollar gained ground overnight, but it has bounced back strongly to that back above that 91 level, and we do still feel that around the 93 level is probably the best value selling zone. We wouldn't really touch it at the moment. It looks like the weakness in the US dollar that we've seen heading into the end of US trade will be enough to keep it a little bit bid in Asian trade today. So it probably won't be a game changer. Of course, it might cause a little bit of volatility in the short term, but I think the focus will be on the US dollar side of the equation, particularly with tapering concerns remaining a key topic for global markets.
Yep, and that is that's it, isn't it? Stan, thanks so much for joining us. Have a great morning. We'll speak later.
Cheers.
Stan Shamu joining us from IG in Melbourne. Let's just detail. No, we're not going to do that. We'll go straight to the break. Coming up on First Business, we will go live to the campaign trail in Perth. Kevin Rudd getting set to unveil a new policy for the oil and gas industry. Back in just a moment.
I grew up